Hello everyone. I'm back again after a very long break, almost 2 months. Very sorry about that, but yeah, due to the emergence of COVID-19, and also there are few other reasons that I was personally handling with, basically about handling myself. So I had some of the things that was going on very hectic in my life itself. So I really, truly speaking, I didn't have much of my time to come up with a good content of the video. So I just thought, you know what, I'm just being lazy. So I just shall start with it. So today we are going to see a very interesting one. Okay, I'm going to go into the practicality of how you're performing the audit and how this is actually being done in many small and medium sized audit firms. So we do this, and it's a very simple one. So if you can see, please bear in mind that if you want to know more about the audit, this is actually a continuation of part 1. So please go back to your part 1 video in order for you to understand it better, how to perform the audit itself. So here if you see, I am in the screen where you can see the balance sheet. So here, let's say I'm taking the same example like the previous video, which is actually the nature of the business itself is a grocery shop. So since it's a grocery shop, and you don't expect me to actually come up with a management account here, I have actually used a management account, a real management account, but I just due to private and confidentiality, so I didn't disclose any of the name and things like that. So it just figures there. I just took that as a sample and then just put in all the figures there. Okay, so to make things more clearer, just be focused that today you are going to learn something where you have learned earlier. The theory is there already in the part 1. Now it's going to be the practical part. As I always emphasize in my videos that you need to apply it. If not, the knowledge is going to be zero. So you must take the effort to actually get to apply it. So here I'm going to show you the balance sheet, the profit and loss, trial balance, general ledger, the customer aging report, and the supply aging report. The reason being is this is what called management account. Management account actually consists of that first four: balance sheet, profit or loss, trial balance, and a general ledger. Okay, so with this, you will be able to start your audit. That is the finalized management account from the client itself. Yes, we do change the management account as the audit goes if there is any adjustments. But for now, we will start it with what the management actually has given. So we have our balance sheets. Balance sheet items, balance sheet is actually considered as a statement of financial position. And most times we use balance sheet in our working place. Okay, so but bear in mind that two terms they are the same. So just bear that in mind. So we have assets, we have liabilities, we have equities in the statement of financial position or the balance sheet itself. So we have that, and then we have our profit or loss. So profit or loss, actually it gives you the performance of the company itself, is that making profit or losses. And then you have your trial balance. So trial balance also same thing. This trial balance is going to give you all the balances in your profit and loss as well as your balance sheet. So you need to make sure that these figures you're very much aware of and you are getting this from the client itself. Then you are having the general ledgers. So general ledgers, actually it is showing you every item's balances as you go down. If you see, there's a lot. It's like 156 pages, and you need to make sure that the balances that you see in the general ledger actually reflects in your trial balance as well as the balance sheet. And if there is a difference, sometimes it can be difference, and you need to ask why there is a difference. Is it okay to be there with that differences, because as I have experienced and I have faced in my workplace, sometimes they do have differences, and I know why there is a difference. It is not because they do it wrongly and things like that. There is a reason. So you need to find what is the reason and make sure that reason makes sense to you, because you are an auditor and you are going to audit a particular company. And then I have customer aging summary as well as the supply aging summary. This is for me to see, how well is the company doing and things like that. If it is more than 6-7 months, you need to ask the client why these customers are not paying yet, and why you are having problem with this particular supplier to pay off. Is there any problem with the legal issues and things like that? So you need to ask the client. Okay, after you have received this, you're going to go into the audit itself. But I'm not going into very detail. It's a very, very short one, because I just want you to get the understanding of it. Once you apply it fully, then you will get more experience, more knowledge for you to understand it very well.